What's going on, guys? It's Investing Hustler here, and today I'm going to talk about one of the hottest pot stocks right now, and that company is Organigram. So, as you can see from these headlines, Organigram reports record net revenue of 12.4 million, up 287%. And then there's this one: Organigram stock rises after marijuana producer grows revenue by 419%. So Organigram has been on fire. But before we get started, I just want to ask you guys to give me a like, leave me a comment in the comment section. Let me know what you guys think about Organigram, whether you guys own it or whether you guys plan on buying Organigram, at what price. Just give me your thoughts on Organigram. So let's just look at their charts real quick. And as you can see right here, ever since January 28th, Organigram has been on fire. They went up from being $5.89, skyrocketing to a high of $7.44, and they're currently sitting at $7.23, up 1.97% from yesterday. If you look at their technical analysis, Organigram is a sell, a buy, and a strong buy. So their market cap is 919 million, and they have 125 million shares outstanding. They have a PE ratio of 40.65, price to book of 4.8, a price to sales of 73.91, and a price to revenue of 73.91. So let's compare Organigram to Aurora right now. So Aurora has a market cap of 9.39 billion. So Organigram's market cap is not even in the billions yet. And Aurora has 961 million shares outstanding when Organigram had 125 million shares outstanding. Organigram's P ratio is a little higher because it's at 40 and Aurora's at 39.89. Price to revenue and price to sales, Aurora has a higher price to revenue and price to sales, and price to book is 3.4. We'll look at Organigram's real quick again. So Organigram's price to book and price to sales is 73.9. So they do have a slightly better valuation. Their PE ratio is pretty much exactly the same. Thing that people might find more attractive about Organigram is they have less outstanding shares, and their market cap is only at 919 million, which gives it a lot more room to grow. So Organigram is climbing near the top of the 52-week high, which does give it a lot more room for downside versus upside. But right now, the technical analysis gives Organigram a buy, a strong buy, and a sell. You look at the 1 minute, it's a neutral, a buy, and a strong buy. Let's look at the 5 minutes. Same thing. Let's get into these articles real quick. I'm not going to read all of them. I'm just going to read pretty much the highlights of these articles. So Organigram reports record net revenue of $12.4 million, up 287% sequentially, quarter over quarter, adjusted gross margin of 71%. So net revenue growth due to its first shipment of adult use recreational products during the period consists of gross revenue of 14.4 million, less excise taxes and returns of 2 million. Adjusted gross margin, a non-IFRS measure, equals to 8.8 million, up from 1.6 million in the prior quarter. So that's a huge increase. Cash cost of cultivation equals to 0.56 dried flower, equivalent to 0.74 all in, included non-cash cost, down from 0.62 to 0.83 all in the prior quarter. I'm just going to read the important part. So the first quarter of 2019 is just the start of what we expect to be the year of a tremendous growth, said Greg Engel, the CEO of Organigram. We've always believed that Moncton campus would be a competitive advantage for us, being able to produce high quality indoor grown product at low cash cost of cultivation. Our first quarter results confirm that, as we reported an adjusted gross margin of 71%. So let's just look at their highlights. Highlights from the first quarter of fiscal 2019. The company is proud to report record net sales from continuing operations for the 3 months ended November 30th, 2018 of 12.4 million, up 419% from the 2.4 million in Q1 and up 287% from 3.2 million in Q4. So gross margin increased 51.7 million in Q1 2019, 1.3 million in Q1 2018, and 3.25 million in Q4 2018, excluding fair adjustment to biological assets. These figures would be 8.8 million, 0.6 million, and 1.6 million respectively. Reported net income from continuing operations was 29.5 million, or 0.195 per share on a diluted basis for Q1 2019, up from a net loss of 1.2 million or 0.12 per share on a diluted basis in Q1 2018, and a net income of 18 million or 0.152 per share on a diluted basis in Q4 2018. So the outlook, fiscal 2019 sales will continue to be dominated by adult use recreational revenue, and Q2 2019 will represent the first full quarter of adult use recreational sales for the company. And this will be the same thing for pretty much every single marijuana company, including Aurora, Canopy, Tilray, Cronos. So all these companies, Q2 2019 will represent the first full quarter of adult use recreational marijuana. So it's going to be a very important quarter for all these companies. It might just be do or die. We'll see. So the company is almost 2 months into Q2 and expects net revenue for the quarter to be at least twice that of Q1, but reminds investors that actual net revenue sales may deviate materially from forecasts. The company reported inventories of 91.4 million, up from 45 million at the year end August 31st. Organigram continues to build inventories as it continues to ramp up its packaging, labeling, extraction, and excise stamping capabilities. So yeah, we're going to skip over to their financial highlights, and this right here is the summary of the financial results. So this is from Q1 2019. Organigram's gross revenue was 14,484,000. And their net revenue was 12,439,000. Their cost of sales was 3,618,000. They had a total of $5.5 million in expenses. Income loss from continuing operations, 46,246,000. Their net income loss and comprehensive income was 29,479,000. This is their selected balance sheet highlights and financial position. So this is from November 30th, 2019. Their cash and short-term investments is 95,949,000. Their total assets is 368,628,000, which is up from 302 million from August 31st. So their total liabilities is 135,660,000. And their total liabilities and shareholders' equity is 368,628,000. So let's move on to the next article. So marijuana stocks rise after Organigram doubles revenue forecast. So I touched up on that on the last article, how they're predicted to double their revenue in Q2 2019. But let's just read the highlights of this article as well. So recreational pot sales are off to a strong start for Organigram Holdings Inc. And Chief Executive Greg Engel said he expects sales to double in the first full quarter of legal marijuana sales in Canada. So Organigram's strong results suggest that other cannabis companies could generate the kind of sales that led to a swollen market capitalizations across the sector. So if they can overcome issues that have been plaguing the industry in Canada over the past year, licensed cannabis producers in Canada have struggled with crop failures, licensing challenges, and lower than expected cannabis yields as they attempt to reshape a sector that was outlawed for nearly a century in Canada. So another highlight from this article is Organigram's cost of growing pot fell to 56 cents a gram, excluding depreciation and stock-based compensation. In the year earlier, pot cost the company $2.12 a gram to produce. So it now costs them 56 cents to produce a gram compared to last year, they cost them $2.12 to produce a gram. The cash cost per gram includes labor, material, and manufacturing overhead, among other factors. So unlike many of its competitors, Organigram has made a big bet on indoor production space instead of greenhouse facilities or outdoor cultivation. Organigram has also built up excess inventory and intends to work with third-party processors to extract oil from cannabis in order to prepare for the edible market. At the moment, edible cannabis products and including beverages are illegal in Canada, but the governing party is required under the Cannabis Act to set up a regulatory scheme by October of this year. The new regulations are positive, Engel says, and they allow companies to develop any product mix you can think of. So that's very good news for the future of the marijuana industry. So hopefully by October this year, edibles and beverages will be legal in Canada, and that might just drive up the sales for the marijuana industry. So I'm just going to move on to another article. Organigram stock rises after marijuana producers grows revenue by 419%. So cannabis producer Organigram Inc. shares surged 11% midday trading Monday after the company reported fiscal first quarter earnings. The Moncton, New Brunswick-based company reported fiscal first quarter net income of $29.5 million or 19.5 cents a share, compared with losses of 1.4 million or 0.002 cents a share. Revenue adjusted for exercise taxes and return rose of 419% to Canadian 12.4 million from 2.4 million a year ago. Next quarter will be very interesting, not just for Organigram, but for every single marijuana company, because it will be the first quarter where they will have a full quarter of legal recreational marijuana. This is the last article, and I'm just going to touch up on a little bit of things here. And it's just a deal that Organigram made. Organigram signs multi-year cannabis extraction agreement with Valens GrowWorks Corp. So the parent company of Organigram, a leading licensed producer of cannabis, is pleased to announce that it has signed a multi-year extraction contract with Valens GrowWorks Corp. So a provider of cannabis products and service focused on proprietary extraction methodologies and distillation, cannabinoid isolation and purification, as well as associated quality testing. So we already know enough about Organigram. Let's just learn a little bit about Valens GrowWorks Corp. Valens GrowWorks Corp is a research-driven, vertically integrated Canadian cannabis company focused on downstream secondary extraction methodology, distillation, and cannabinoid isolation and purification, as well as associated quality testing, with 3 wholly owned subsidiaries located in and around Kelowna, BC. Subsidiary Valens Agritech, ticker symbol VAL, holds a license to cultivate cannabis and produce cannabis oil under the Cannabis Act, as well as a license to conduct analytical testing for the cannabis industry. This seems to be a move that is looking towards the future when Canada will finally legalize edibles and beverages. It's because, as it mentions here, Valens GrowWorks Corp holds a license to cultivate cannabis and produce cannabis oil under the Cannabis Act. So as of now, cannabis oil is not legal in Canada, but hopefully by October, it will become 100% legal in Canada for recreational use. And it seems like Organigram is planning for the future. And this is why Organigram signs a multi-year cannabis extraction agreement with Valens GrowWorks Corp. Let me know what you guys think about this deal. And also let me know what you guys think about Organigram. Are you guys buying? Are you guys holding, selling? So if you guys enjoyed this video, don't forget to give me a thumbs up. And if you guys aren't subscribed yet, don't forget to hit that notification bell and smash that subscribe button. And I'll see you guys on my next video. Bye-bye.